Good morning. We just had the USDA March stocks and planting intentions report, and I've got Michael Reginelli and Brian Basting here to hash out some of the report. So Brian, first question for you. What was the big takeaway today?
The big takeaway was a lower than expected acreage. Most in the trade were expecting that these high prices, 8-year high in beans, 7-year high in new crop corn, would really catch the farmers' interest. Well, it has. They've increased the acreage from a year ago, but well below expectations. The corn acreage was 2 million bushels, 2 million acres below expectations. Soybeans, Drew, were 2.5 million acres below expectation.
So limit up in the first 4 contract months for corn futures right now. Michael, what do you think moving forward that plays out to from a cash implications for corn and corn spreads?
Things are just going to stay tight. They've been tight. Farmers have been an active seller this year, but we've had trouble covering in demand effectively. So we've known that stocks are somewhat tight. They came in, on middle to low end of the range today. Acres numbers, obviously, like Brian mentioned, well low, shooting the market up. Farmers don't have that many bullets left to fire, though, so it's still going to be the job or the emphasis of the cash markets to try to move grain into the pipeline, get it covered in. I don't think that this is necessarily going to be that relief valve to let the foot off the gas, for lack of a better term, for basis and spreads. Still feels like things are going to stay firm for the duration.
Absolutely. Brian, what's from the stocks standpoint, soybeans, what did you take away there?
It really confirms that there was no big shock in the stocks number for soybeans, Drew. A lot of people were saying, well, could we find soybean bushels in this report? We really didn't. It looks like the crop size estimate from last fall is about right on. So what we're faced with now is the last 5 months of the crop year. Will we have to do some additional rationing in terms of exports or crush to make sure there's a comfortable carryout supply of beans on August 31st?
Absolutely. Very good. Michael, quick question for you. In terms of total stocks, what are the implications for spreads, both old crop and also old new, moving forward?
Well, if we don't buy acres on corn or beans in particular, the new crop spreads are going to continue to get compressed. New crop bean spreads are already trading at a modest inverse. That'll likely continue if we're not higher than 87 point some million acres. So futures are going to have to buy acres back in, basically, is kind of where we're at, and they don't have a long runway to do it. We're going to start planting very soon. So new crop spreads probably stay somewhat tight, firm, compressed, trying to drive acres. And so unless we can ramp up the numbers significantly from what we saw today, I would expect new crop spreads certainly to stay tight as well.
Makes sense. Brian, last question here. Wheat, what are your takeaway? What's your takeaway there and wheat acres?
A bit of a fly under the radar comment there, Drew, is that we found 1.2 million acres of winter wheat. So maybe that was part of the reason why our soybean and corn acres were lower than expected, but it can't explain all that.
Right.
But we did find that there was a bit more winter wheat. But the spring wheat acres are down in the northern plains as expected, and it's quite dry in the northern plains. So there really could be some dynamics playing out here in terms of the weather being dry in the northern plains where they're trying to get that crop planted. So I think Michael really hit the nail on the head. We really got an acreage situation here now setting up the next 60 days where it's really going to be dynamic. What crop will get those acres, whether it be corn, beans, perhaps even spring wheat will work into the equation. But right now, beans and corn are leading the way.
Brian, you're saying if it stays dry, they're going to be less hesitant, or they're going to be more hesitant to plant beans in that area? Is that kind of what you're saying?
It's a good question, Michael. I think if they're really dry up there, I think they're going to take a chance, a calculated risk at some point. But it's really dry. They certainly need some moisture up, especially in North Dakota and South Dakota.
Yep. Last question for you, Michael. We've seen a huge influx of commodity buying from index funds, managed money funds here. Tomorrow starts the new quarter. Do you see this pattern continuing where this buying persists in ags specifically?
Oh yeah, I think it has to. I think today just reiterates it. I think the mainstream, markets now that we're, like Brian mentioned, at multi-year highs, will continue to probably attract investments, and we're already historically long from a managed money spec standpoint.
Right.
I would imagine that's absolutely going to continue as long as volatility continues to crank like this.
Absolutely. Well, thank you guys very much for your time today, and good luck the rest of the day.